What is IPOs and how to buy them? What is an IPO? An IPO, or initial public offering, is the process by which a private company offers its shares to the public for the first time. It marks the company's transition from private ownership to being publicly listed on a stock exchange like the NSE or BSE in India. The purpose of an IPO. Companies launch IPOs to raise funds for various needs, such as expanding operations, repaying debt, developing new products, or entering new markets. In return, investors get the chance to own shares of a growing business and potentially benefit from its success. How an IPO works. Before going public, a company works with investment banks, called underwriters, to decide the issue price, the number of shares, and the valuation. Once approved by SEBI, Securities and Exchange Board of India, the IPO is opened to the public for subscription, typically for 3 to 5 days. Types of IPO investors. IPO subscriptions are divided into categories. Retail individual investors, RII small individual investors. Non-institutional investors, NII high net worth individuals and others. Qualified institutional buyers, QIB mutual funds, banks, and insurance companies. Each category has a separate quota of shares. How to apply for an IPO? In India, there are two main ways to apply for an IPO. A. Through your broker's online platform. Most stockbrokers like Zerodha, Grove, Upstocks, Angel One, and ICICI Direct allow IPO applications via their app or website. Log into your account. Go to the IPO section. Select the IPO you want to apply for. Enter the number of lots and price. Approve the payment using UPI. B. Through your bank, ASPA method. ASPA stands for Application Supported by Blocked Amount. Log into your net banking account. Find the IPO ASPA option. Choose the IPO and enter bid details. The bank will block the required funds in your account until allotment. What happens after applying? After the IPO closes, shares are allotted based on demand and availability. If you receive an allotment, the shares are credited to your demat account before the company's listing day. If not, the blocked funds are automatically released. Listing day and trading. Once listed, the stock starts trading on the exchange. The price may open higher or lower than the issue price, depending on investor demand and market sentiment. Why investors buy IPOs? Investors buy IPOs to benefit from listing gains, if the stock opens above issue price, long-term growth potential of promising companies, risks involved. Not all IPOs perform well. Some may fall below their issue price due to overvaluation or weak market conditions. It's important to research the company's fundamentals before investing. Conclusion: a gateway to ownership. An IPO is your first opportunity to own a piece of a company's future. By investing wisely, through proper research and understanding, you can make the most of India's growing equity market while participating in the nation's corporate growth story.